Hi folks, this is Deepak Shenoy from Capital Mind. We're going to do a bunch of videos on Budget 2016. This is the first one and it points to the basic question, what's the point of a budget? Well, there are two real points of the budget. What it really is how much the government will spend, on expenses, what's it going to spend on, and why is it going to spend that. There's also how much the government expects to earn as revenues, either as taxes or as by selling stakes in public companies or any other source. Finance ministers tend to get very bored during the speech, so I think in order to add levity, they put in poetry and jokes and a little bit of fun. So it sounds like fun to them, but it's a little sometimes tedious to us. But that's what the budget is really about. What you care, or most people care about, is aware how much am I saving in tax, and that's pretty much all people really care about. That's why they leave that part till the second half of the budget speech, so that you actually watch the first half. Otherwise, everybody would switch off their TVs and walk away. What we're going to do is try to decode and demystify what's happening with the budgets. For instance, the government makes a lot of money. They make the money through direct taxes, that's income taxes from you and me, that's income taxes from our companies that we work in, and also from indirect taxes. So apart from paying a part of your income to the government before you can spend it, you pay a part of whatever you spend also to the government as part of customs duty, excise duty, service tax, and a bunch of other smaller unnecessary taxes perhaps, but these are the three major headings. The government also earns money through interest and dividends. Remember, it owns 70% of the banking system. Some of them actually make real money. They give it back to the government. There is income from states where it has lent money to states. States pay them interest. Others include grants and some other pieces that come in through regular other sources. Sometimes those other sources actually are quite significant. For instance, stake sales in government companies will actually add a significant amount of non-tax revenue. That's what it's called. Then it takes all this money and gives the states a significant amount of money back, because the states have to spend on their own, and the states don't tax people through their incomes, and all income tax comes to the center. So at least a good part of that goes and flows back into the states. In the last budget, we saw that the government actually increased the state share substantially. So its revenues in net terms grow up only 1% in 2015-16. That was the budgeted response. Now, what we're going to see is how much the government actually made, or how much it actually spent in comparison with what it had budgeted. Apart from the budget, the estimates there's some other important pieces that come in. We're going to talk about those. The expenditure, for instance, there's something called a plan expenditure, which will no longer apply because there's no concept of a planning commission. It's been disbanded, but you'll still have some revenue that is, or some expenditure that is allocated to something called a larger plan. There is non-plan expenditure, which is stuff which is pretty much everything else, like interest payments on debt that the government has taken, or spending on pensions and police. Remember, OROP is on, so the pensions are going to go up. Defense spending, subsidies that involve largely fertilizer, food, and petroleum subsidies. The petroleum subsidies are going to be substantially lower this year because there's no LPG, a very little LPG subsidy, and a very large reduction in anything on petrol and diesel. So that should help reduce the fiscal deficit. If you see over here, you got a large fiscal deficit this year, and this is going to have to reduce next year as a percentage of GDP. However, we believe that's not going to happen. There's many reasons for that. We'll come to it. We're going to look at the fiscal deficit changes. We're also going to look at how subsidies have changed in the last few years. As you can see, as a percentage of government expenditure, subsidies have only been going up. Even through the liberalization period, we saw a small dip, and then we've seen an increasing amount of expenditure on subsidies. This time it's a lot lower, and we hope that this continues to be the case. What you really care about is India's tax rates. Is the government going to reduce tax rates like it said last year? Let's find out on Feb 29th, and this is one of those years where 29th is actually going to be where the budget is. Now it's a working day, it's a Monday, so markets will be open as well. We'll talk about market impact of the budget. We will also see here, for instance, on this chart, you see 93%, 97% was the highest tax rate during Indira Gandhi's rule in, well, the early 70s. We're talking the fact that you had so many exemptions from your income that whatever was left had to go to the government. So they give you an exemption for spending on this and on that and a couple of other things. And people did report all their income. So the government pretty much decided that anything you report is ours. So since then, of course, we've seen a lot come down through liberalization when it was 45% in 92 to 30%, which still applies. 30% is actually 33 because they've added some cess and something else and some all sorts of things, but it's the actual tax rate's about 30.9%. We are going to see changes in service tax rates as well, and in the rate that GST might apply to as a standard rate across all goods and services, including customs. So that might be something that we'll take care about. So join us from now to Feb 29th. We'll have lots of interesting stories. You'll learn. We hope you evolve and understand and see a lot of the things that the budget is really about. First time we're trying this format. We've done budgetonomics in the past as a book. We hope to enlighten you better with a budget. And we'll also have the standard question, what are you going to save in terms of tax? We look forward to hearing more from you, and we look forward to this, and I hope you enjoy what we have in store. Do visit